Hello, everybody. Good morning. Today is January 7th, 2023. This morning, I would like to talk about interest rate. Um, Currently, I think if you get a 30 years fixed mortgage rate is 6 point something percent, and everybody is crying and say, oh, so high, I cannot afford anything. Of course, because the property prices are so high with the higher interest rate, it's hard to get a new home for yourself or first time buyer. But years ago, when I mentioned to people and say, hey, anything lower than 5% was good, people probably thought I was crazy because the rate was like 4% or even sometimes lower, much lower than that. But I'm talking history. So that was crazily low, and now it seems like back to normal interest rate. But unfortunately, with that high property prices, yes, it is not that easy to buy your first home. But this morning, I'm not talking about the mortgage rate. I would like to share with you what I found as the federal fund rate. It's more like the federal, the people is talking about, wow, the Fed will increase interest rate in 2024, 23, not 74. It's so much higher and higher. It's high interest rate, and then the market will crash. I don't know whether the market will crash or not, but what I find is whether there is a truly relationship when the Fed increase the interest and then the stock market will go down and down and down, and for how long. Here, let me share with you the one printout that I got here. If you can see, is the interest, and the blue line is the S&P 500. So yes, the interest rate is so low here, S&P go way too crazy. But you can also see here, the interest rate go up, up, up. S&P also go up and up to for a few years. That was like, let me see, 2016, 17, 18 until it crashed in 2020. Yeah, we know what happened in 2020. If we look at another one, it's much longer time, it's like 30 years. It also shows you a pattern. S&P go up and up, and the interest rate at that time is not really low, 5, 6, 7%, and this continue to go up until these very crazy years with super low interest rate. So if the Fed increase interest rate back to this longer period, or for the past 10 years like that, this is not the end of the world. 5%, 5.25%, people say, wow, it's high. High and low is relative. 0% interest is pretty low. It's crazy. But 5%, 6%, is it too high? Yes, for some people who need to get a loan. But when you invest in company, in stock, is it too high? That means they cannot make any money because the interest rate is 5%. The company will file bankruptcy because it's 5%, 6%, 7%. You think I'm not that expert in the interest rate and stock market, whether there is a relationship. That's what I just want to show you is this map, this table. So for this year 2023, many people, expert or whatsoever, predict there is a continues to go down for another quarters or two, and it dropped 20 or 10-15% in the stock market. Then it's not if you are buying now, it's not really that bad. Just like if you invest in certain stock, when it go up 10%, will you sell it immediately? Probably not. You probably will hold it for a longer time because this is for retirement, or 10% is not that much. So if the price drop 10%, you probably will not sell it. 20%, maybe. Like, hopefully not many people bought any stock at the peak of last year, January, and now it's down like 20% or so. Of course, there's the big stock market, S&P 500. Individual stock is another matter, but the majority people, when they invest in stock market, they probably will not just buy one or two stock. Hopefully not. They buy a bunch of stock in different industries, so-called diversified. And hopefully you can wait until the bottom goes up again and again. And hopefully you don't need to sell certain stock in order to get your money to live your life every single month. Investment, there are different type of investor. I mentioned I'm very interested in the high dividend stock, and I also mentioned if one or two stop paying dividends, I'm fine. It dropped like 10 or even 20% of my dividends. Hopefully it will not affect my life any meaningful way, because I have other source of income. That's very important. When you retire, you may have Social Security, you may have pension, or you have rental property. Whatever, you don't rely on one source of income like stock market, especially if you need to sell stock in order to get the income for your monthly expenditure. This is really bad. When it's dropped 20%, you have to sell some, but if you do the math, you actually is not that much losses, because you only sell a small portion of your stock, and you can wait until it returns, and then you can sell a little bit less share. So that's all for today, and I hope everybody have a great year 2023. And if you would like to buy any stock, any cryptocurrency, be aware there is a chance that you will lose your money, and hopefully it will not affect your life that much.